Hey everybody, this is Kurt from RelaxTrader.com, and I wanted to show you a system today that's absolutely truly remarkable, and that is a RSI system that has been timing the market since 1960 with 85% accuracy. And you can see actually right now it's in a trade, and so there's an 85% chance that the market will end up higher than this point right here, even though we've had these two big pullbacks in here. There's a really good chance that this trade will end up higher. Now, of course, that means that there's a 15% chance that it'll be a loser. But you know, trading is all about the odds of success. And so we want to just keep doing what works in the back test and walk forward testing. I basically designed this system back in 2013 and 14. So it doesn't trade that often, but you see when it does, it's been working well in real time. There's some losers in here. Naturally, you're going to get that. But since 1960, that's just remarkable. So let's go in and look at the code really quickly so that if you guys want to follow along and make this system, you can do so as well. And I'm going to show you what the system has returned since 1920 in just a moment. So that's going to be really, really cool. So the way this system works is, first we define our ATR. That's how we define, how many shares we're going to buy based on current volatility. And then we're just going to set up two simple RSI functions. One is going to be based on variable 2, one's going to be based on variable 3, and these are just the lookbacks of, or how fast, I should say, the RSI is going to oscillate. We have 4 and 9 in here, seem to work really well. And then we're going to say that if we're in a bull market, and I'm a huge fan of only buying in the direction of the trend, so we're going to use the 200-day simple moving average, which is very standard. And then we're just going to say if RSI 1 is above a certain value, and let's see, excuse me, we set that to 70. This is a pretty standard set for RSI. RSI can fluctuate between 100 and 0. And we'll say that if it's above the 70 line and the lowest RSI value of a certain number of look-back periods, we'll set this to 5, of a certain number of look-back periods is below a number. So it means basically that the market, let's just demonstrate this, that the market has been declining, and you can see that here, and then suddenly thrusts higher. Let's see that here. Market's been declining with these two RSI values and then suddenly thrusts higher. Then we're going to be buyers. So let's go back to the code. And so a certain number of look-back periods for both of these, if they're both below, what do we say? We say 40. And then that high value occurs in RSI 1, we're going to buy. And we're going to hold on to that position until RSI 2 catches up. And so we say, that's also going to be 70. So once RSI 2 catches up, we're going to just sell. And we do that again and again and again. So basically, it's just, you can do this with price as well, but it's kind of cool to do it with the RSI because a lot of people track the RSI. But my philosophy is you don't need any indicators really because it's just reflecting price. It's just a derivative of price and just makes your charts look fancy. But since a lot of people use RSI, I figured I'd just design a system that also uses it. So we do this again and again and again, and let's see, wow, where's our loser? Yeah, see, you're gonna get this nasty, nasty loser during the COVID flash crash. And so that's why I wouldn't trade this system per se, but it's just like kind of a bellwether of where the market may go in the future. So let's look at also what happens if we test the system back to 1920. INDU for industrials, Dow Jones Industrials. So it also got into this trade here a couple of weeks ago. And so let's reach back to 1920 and see how the system has done. And that's just that's just remarkable. I mean, this simple system has been working since 1920. Let's look at the odds for this. Almost the same, almost. So we have 84, almost the same as the S&P 500. But this is going back, 120 years that this kind of style of system has been working. And that, like I said before, is basically the S&P 500. The markets in general are mean reverting machines and trending machines. And so if you're buying in the direction of the trend and you're buying these thrusts as the market mean reverts, then the trend is going to take back over and propel it higher in bull markets. I haven't tested this in bear markets, and that's mostly because throughout time there just aren't that many bear markets. You know, due to inflation, due to growth of companies, the market is basically going higher most of the time. Of course, there's caveats to that, like the 2008, 2009 recession, the dot-com bubble. You know, there are differences out there in markets, but basically it just pays to be buyers of dips and uptrends over and over and over. So let's go back to the code. And yeah, you guys can use this as well. I'll have this at the end of a blog post, which I'll show you in a minute here. But I just wanted to show you how remarkable a simple set of rules can be and how insane some of the results can be. Let's just go back. 1920. I mean, that's just unbelievable. So let me just show you where that is on the website. Blog. Here we go. Here we go. So an RSI trading strategy that's working since 1920. I would encourage you to come in here and read this article. I talk about trading systems in general, like sell in May and go away. That's just an introduction to what a trading strategy really is. And then, I critique it, talk about trading strategies in general and how they're useful and how you should be using them yourself in your own trading and not using the news, not using guru opinions, not listening to financial TV. And here we go. Here's the stats if you want to check them out again on the blog post. So that's the S&P 500, SPX, that's the index. That goes back to 1960. And here's the Dow Industrials all the way back to 1920. And then at the bottom here are the basic rules and the code if you want to take a screenshot of that or write it down or just port it over to your favorite automated trading brokerage account. So I encourage you again to come check out the blog. There's always new stuff in here that we've been posting recently. And I encourage you to sign up for my stock picking system. That's really where the money is in trading stocks. It's been doing really well. There's 2 systems there. And also I have a lot of other trading strategies in there, some day trading strategies for you to take and use in your own brokerage accounts there. I have all the open code there if you're a member. So yeah, I encourage you to do that. I encourage you to spend some time on the blog, get to used to what trading systems really are and all these other systems that I've been writing about. And so that's enough for me. This is Kurt signing out.